Welcome back to L Podcast. People aren't having kids. Let's find out why and what the ramifications are if this global trend continues. Here to lend their expertise in the matter is Shamil Ismail, author of the book The Age of Decay: How Aging and Shrinking Populations Could Usher in the Decline of Civilization. Shamil Ismail is an investment analyst and chartered financial analyst in South Africa. Thank you so much for joining us today.
Happy to be here, Jesse.
Let's read the full title again. The full title is The Age of Decay: How Aging and Shrinking Populations Could Usher in the Decline of Civilization. I think the title says what the book's about. But how do you see the demographic collapse playing out globally over the next couple of decades?
Yeah, the title is provocative, and I think it should be because there's a certain level of underappreciation for the threat that this actually poses. It's not unknown. There's a lot of people that have been sort of commenting on these trends, but I don't think it's being taken seriously enough. And the reason for that is that we constantly expect this thing to be a long-term event that will affect us in the decades, probably 5-6 decades out. So it's not imminent, or that's what we think. It's not imminent. And what I try to do in my book, The Age of Decay, is really to show that, listen, we don't have to wait 5-6 decades to see the signs. We're already seeing the signs. By next year, by 2025, 31 countries will have declining populations. China's losing about 2 million people per year. China's just been overtaken by India as the most populous country in the world. Japan's got shrinking populations, Italy, several developed countries. And the implications for us will actually start pretty soon in terms of when we start seeing service delivery and specifically essential services starting to break down.
You are an investment analyst, and you're also a chartered financial analyst in South Africa. So when you wrote this book, are you looking at it more from an investor side of things? What was the reason that you even wrote this book, studied this information? What got you interested in this?
It's a very good question, Jesse. It took 2 years to do. And when I set out it was basically just exploring from an investment point of view. I've been covering the consumer markets for the past 30 years. So in the consumer markets, ultimately everything depends on the consumers that we've got, the number of consumers. And if we go back over the past century, basically we've just had one trend, which is a growing consumer market because the population has been expanding. But the question then had to be asked, what happens when populations flatten? And even worse, what happens when they start declining? What does that mean for investments? And that was my initial interest. But as I started, peeling back the layers of this particular trend, it just became so much broader. It's not just the economic impact of it. There's a huge social impact of it. The fact that we don't have enough essential workers to provide the maintenance that's required in developed markets. What happens to those cities like New York, London, and Paris? And what happens when the population drops by 20% or 50%, as will happen over the next 50 odd years? And when you start looking at the granular detail, you actually find that there's a lot of other things that I don't think the economists and the policymakers, the politicians have considered. Because currently the main concern from a macro point of view is, do we have enough money to fund pensions? Because the pensioner body, the number of old people are rising and the number of workers would be shrinking. That's the extent of the concern. And when we go down the detail, you find out that it's much, much broader and much more challenging.
So you said earlier in this podcast that there's 31 countries that were having a shrinking population. So you're talking about not only is their fertility rate below replacement rate, but they're actually in 2024, their populations are less than they were in 2023 and 2022. Is that correct?
Correct. So most of those 31 countries have pretty stable to slightly decreasing. So it's not a 5% decline. It's a small decline. But the fact is that the trend have started. Once you go down that trend, you can look to the births that happened in the previous years, etc. You can just see the numbers actually dropping significantly. Yeah, so it's very difficult to reverse.
Which of those 31 countries are most in peril?
So top of the list would be Japan, South Korea, Italy, even Germany is in that pot. I must stress that in this first phase, so I've got different phases for how I see this playing out. In the first phase, which is really the next few years, it is fairly benign. And the reason for that is when it's only a handful of countries like Japan, Japan's been struggling with declining populations for more than a decade now, by the way. But they can manage it because the rest of the world isn't really there yet. So they can outsource their production, build Toyota factories in the US, in South Africa, everywhere. They can draw on labor in other places of the world. When the other countries like South Korea, Italy, etc., also join that fray, it's still manageable. But what happens when 14 countries becomes 28 countries, becomes 50 countries, and they're all competing for a shrinking pool of labor? And that's really when we'll see the major dislocation in the labor markets.
So let's flip that question around. What countries are, say, best positioned, we'll say the next 30 years, say 2055-ish or something like that?
Yeah. So there's a couple of anomalies in terms of the developed countries, like the US, for example. So if you look at the US forecast, the UN forecast for the US population to the end of the century, it's actually quite positive. In other words, you've got population growth. But the quirky thing is that your fertility rate is below replacement rate. So the reason why places like the US or Australia's forecast population is growing, as well as Canada, by the way, is because of immigration. Now, that is where the demographers at the UN say that, look, this is the past pattern or the rate of immigration. If we forecast that going forward, then you should be okay. But we all know, you there in the US, what's happening now in terms of your discussion at the political level. Build the wall, strengthen the borders, etc. Clamp down on immigration. In fact, if you look at the US immigration figures post-2016, you see a significant decline in inbound immigration. Also significant decline from foreign students wanting to study in the US because it's seen as less welcoming. Now, the point is if the US immigration rates drop, then all of a sudden the US is not as safe as the forecast suggests it to be. In terms of which countries would be the best bet, it's actually in Africa, because the fertility rate in Africa, although it is declining, it's still well above replacement rate. And even by the end of the century, it will still be higher than the replacement rate. So fast forward, by the end of the century, if you look at the number of working age people, those are people between the age of 15 and 64, 40% of working age people will be born in Africa. I mean, let that sink in. The rest of the world have aging populations because the older people, because of better healthcare, they live longer and they form a greater proportion of the population. So the developed countries that we have today will have a large proportion of aged people with few workers to support them. And meanwhile, in Africa, you've got an abundance, an excess supply of labor, of young labor.
You talk in your book about the 22nd century will be the African century. When do you foresee Africa becoming the economic engine of the world?
We've got the opportunity currently, but it will take probably 1 or 2 generations to play out. Now, again, it works in stages. So we can learn from the experience of Ireland and India, or even China for that matter. And what happens is that your first generation, basically, they do the basic work. So if Africa had to follow China's playbook, for example, China, as recently as the 1980s, were underdeveloped. It was a poor country. And what they did in the 1980s was basically they opened to be the factory of the world, the workshop of the world. Not through high levels of education, because they had very low educational attainment, like Africa has currently, by the way. That wasn't a hindrance for them. What they were willing to do was to use that excess labor that they had in the 1980s to produce things very cheaply for the rest of the world. And those goods in turn provided the upliftment for a large number of people in other countries to basically enter in the middle class. So it was a win-win situation. But China today, if you also remember that in 1980, China implemented the one-child policy. Okay, so that first cohort of one-child family children, they came of age at the end of 1990s. So they would be going into finishing school around about 97, 98. And because they had doting parents and four doting grandparents focusing on the single child, they were pretty much spoiled for choice in what they did. And when you look at the educational attainment of the Chinese from around about 2000, it just shot up. Why? Because those first cohorts, they said, no, you're not going to work in a factory like mom and dad did. You're going to go to university. You're going to get an education. So currently, there's a huge number or the education enrollment in China is very high. And it's no surprise, therefore, that the youth unemployment in China is also quite high. They reached 21% before they stopped reporting it, because there's just too many educated people chasing a limited number or fewer than required jobs there.
How do you think China then will play out? I mean, there's a lot of people that say the 21st century is going to be the century of China, but you listen to some geopolitical analysts like Peter Zihan, who basically says China's going to collapse and they're lying about their population numbers. You mentioned that you think Japan is the worst position, but it seems like Japan, I mean, China, Italy, South Korea, they're all in the next decade going to collapse. You think that's accurate? Should the world be worried about China this century?
Yeah, I think, look, I know some countries like the US are very focused on China as being a threat. But I agree with Peter Zihan in terms of his assessment there. I don't think it will necessarily implode. It will just be a slow decay, as I describe in my book here. The reality is that their numbers are shrinking. Their population is also aging very fast. So right now, the number of aged people is about 11% of the total population. By 2050, it will be about 33% of the total population. So those people aren't economically productive. So they don't contribute to GDP growth. When you talk about enrollment if you want to have to be afraid of China as a military threat, you have to look at, okay, how strong is its military? Well, again, you can build all the drones you want, but ultimately you need manpower. And if you look at that cohort that's coming out of the one-child policy, there are certain sort of characteristics that actually makes them less keen on those type of things, like putting themselves in danger and enrolling in army. So, of course, you could have forced conscription, but the reality is that I do think the fear of China being a global power is exaggerated. In my view, the next global power from a company's perspective, from a country perspective, would be India, because they're just firing on all cylinders. If you look at the diaspora, the highly skilled people in the US that's running companies, the head of Alphabet, the head of PepsiCo, MasterCard, etc., all Indian-born executives. It's not that they're from Indian heritage, they were actually born in India and educated in India before they went to a US university and furthered their education there. So that's the country really that will be the US of the next century.
So you're saying basically you think that India will overtake the US as the global superpower? What year do you think that will happen?
Well, it depends on your immigration policies, really. The fact that if you want to close borders, if you want to... Remember, the strength of the innovation in the US, a lot of those things, even the Google guys, have ancestry from immigrants, as like one generation earlier. And if you want to close your border to that, what will happen is that not only do you lose that skill, but those people go and work in another country. So take example, all those Indian-born execs that's quite prominent in Silicon Valley. As I said, the head of Microsoft, the head of Alphabet, Google, etc. They all came from India. Now, if the borders were closed to them, what will they do? They'll do that same thing in India and they'll benefit. So not only would the US lose from it, but India will strengthen from it. It's very difficult to put a date to it, when this will happen, but certainly you can see the trends growing. India, by the way, is the 5th biggest economy in the world now. Okay? Only 80 years ago, in 1947, India was still a colony of the UK. India just passed UK as the 5th biggest economy. UK is now the 6th biggest economy in the world. So it just shows you how we are changing positions in the sort of the global scorecard of rich nations.
One of the reasons I invited you on is, one, I enjoyed your book, but also I've had a couple podcasts in demographics. I had Paul Moreland, who's, calls himself the UK's leading demographer. I had Dr. Daryl Bricker, who is from Canada, and he wrote a book, I think, called like Shrinking Planet. And so, you're, what was it? Oh, Empty Planet. Yeah, my bad. Yeah, you know better than I do. I actually had him on a few weeks ago. I apologize, Dr. Bricker. But anyways, you being in South Africa, you have a different perspective. And it seems like your perspective is a lot more negative towards, say, the Western world, or, quote unquote Western world, say Europe and North America, and a lot more positive on the growth economically of Africa.
Yeah. So, Jesse, I don't have any horses in this race, so I view my analysis as independent. I'm just setting out the story as I see it. I am familiar with those authors that you spoke about, and invariably, there's always, and I really enjoyed Daryl's book, The Empty Planet. The demographers in the West, they do raise the threat of this. They do a good job of doing that. But there's always a bit of let's sort of doom and gloom. Let's soften a bit. We don't have to worry too much because blah, blah, blah. What I try to point out in this is that, guys, we're missing something important here. And that is that it's not just the demographics. There's a whole host of other contributing factors. Now, let me give you one example. I touched on this rising educational attainment. So that's got nothing to do with the population demographics. It's something completely different. But the trend is there that in developed countries, over time, you have a higher level of educational attainment. So take the US. In the 1970s, only 10% of the US population had degrees. So back then, 90% of it were non-degrees, as you call it, non-college educated. And the 10% that were in that position, be it doctors, lawyers, accountants, etc., because of the scarce numbers or the low numbers, they earned high salaries, etc. So over time, parents would encourage their kids, listen, get a higher education, improve yourself, etc. That's a natural tendency. That's not just a US thing, that happens all over the world. So what happens is that currently, in a place like the US, more than 30% of the population have degrees. In Canada, it's 39%. By 2050, 55% of South Koreans and Japanese will have degrees. Okay, now that sounds great. The right of education is a basic human right. It's great that we further education. But let's just ask the other question. Well, if all of us have degrees and we're doctors and lawyers and the like, who's going to collect the rubbish? Who's going to fix my broken pipe when it breaks, or electricity maintenance, or road repairs, or all those things that we don't pay attention to it? Because in the past, you had lots and lots of labor, essential labor, to do that. Call it manual workers, blue-collar workers. But what we don't pay attention to is that the numbers are shrinking. Besides the shrinking populations, their numbers as percentage of the workforce have been declining. And that's where you see service delivery breaking. And people don't trade down. So I mentioned the example of Italy. Italy has a huge labor problem. They've got significant labor shortages in agriculture and in hospitality. Hospitality is hotels and the restaurants and the like. I remember Italy is a major tourist destination. So you need people to work in hotels and bars and the restaurants. The exporting of the olives and tomatoes, etc., is also a big part of it. But the young Italians are well educated. They're not going to work in restaurants or on farms. So they need the labor, and the farmers, the agriculture industry, is crying out for, listen, let us get foreign workers. But what happened? Well, in the last elections, they elected Giorgia Meloni, who's a right-wing politician who campaigned on anti-immigration. So basically, you're shooting yourself in the foot in terms of doing that. And the consequence is that you will just see, in their case, you can't optimize your tourism industry, you can't optimize your agricultural industry.
I found this quote from your book interesting. You say, quote, that the critical tipping point when we will really experience the effects of a too low birth rate is not when the fertility rate drops below the replacement rate of 2.1. Rather, we will start seeing the consequences when the ratio of worker to age people drops below 2.0. Can you explain why the ratio of worker to age people is more critical than the fertility rate itself?
Yeah, so it's a very good question. So what happens is that when you've got the lower fertility rate, it takes a couple of decades to play out. And that's one of the reasons why we are not too worried about it, because you actually don't see the immediate impact. But when you have a situation where, if you take a total population and you count the number of people that's older than 65, let's say it's 10 million people, and the number of people that's of working age, 15 to 64, it's 20 million people. So that's a 2-to-1 ratio. That ratio is actually quite low, because in the past, that ratio used to be 6-to-1. So you had like 6 workers for every 1 retiree. Now, this is not just a matter of funding a pension scheme or a retirement scheme or the 401ks that you guys have in the US. It's not just a matter of that part of the problem. It goes well beyond that. So think about it this way. If you have six times as many workers for every retiree, okay, those workers can work in a range of industries. Some of them are blue-collar workers. As I said, in the 1970s, only 10% of the population in the US had degrees. Now that ratio is higher. So what happens is that we previously, of that 7 workers, let's say 5 of them were blue-collar type or essential type workers, and 2 were higher skilled, as would be a reasonable assumption. Now I've got a situation where that 5 has now dropped to 4. 4-to-1 is still a good number. It's going the wrong direction, but of those 5, 3 is now essential workers, and 2 is essential workers, and 2 is higher skilled workers. And you can then see all that. This is where you have a problem, because the essential workers needs, that number actually doesn't, it's not a variable number. The number of workers that you need to maintain your infrastructure is fairly fixed. And this I got from a study that was done in Germany. So post the reunification of Germany after 1990, the unified German government invested a lot in the old East Germany, if you remember the communist East bloc. So what they did was they expected the population in East Germany to grow significantly. 15 years later, that didn't happen. So they had these towns in the eastern part of Germany, basically well-developed, great infrastructure, but too few people. And it was a problem. So you think, oh, well, what's the problem? You built this stuff. Well, the maintenance cost is still there, because you can't just build things and not maintain it. Things do break. Things do decay over time. And what happened is that because you've got fewer people living there, those costs have to be carried by fewer people, and the cost is shot up. So it becomes unaffordable. And those are the type of challenges that we will see when you hit that problem, or that ratio of 2-to-1, when it's basically 2 workers for every 1 retiree. You'll find that not only do you not have enough workers, but you definitely don't have enough essential workers.
You mentioned this in the book, but let's say the population of New York City decreased by like 2 million. Well, you still have the same miles of track of subway, and you still have the same miles of plumbing, water mains, and you still have the same miles of power lines and whatnot. And as you also mentioned in your book, just take a look at what happened in Detroit. I mean, you basically have a shrinking population, which means you have a shrinking tax base, but then you have the same fixed costs for the big infrastructure. So then basically the city has to borrow to just be able to pay for basic maintenance on the infrastructure. And then as the taxes go up, people leave for other jobs, which creates kind of like a death spiral. Do you see this scenario just slowly happening in many of these developed countries, year after year?
Yes, that unfortunately is the vicious cycle downwards. And it is very difficult to stop, because ultimately you've got to start with how do you improve your population growth rates, specifically in those problematic countries. And that is very difficult to answer. But to answer your question, this cycle plays out, and what will happen is that eventually you've got this decline in living standards. Things start breaking around you. The municipalities or the town councils, they can't fix it. They don't have enough money to repair the potholed streets. That's the easiest thing to do. But when you can't fix burst pipes or downed electricity lines quickly enough. Now, just also remember, we now have another challenge, which is climate change. So every time you guys have a major hurricane season there, there's a lot of repairs that need to be done. Down power lines, etc., the roads washed away, and all those things needs workers. And when you have this breakages coming, or accelerated breakages, then it's not just the deterioration of wear and tear, but actually climate-inflicted breakdowns. So then what you will have is what I call eventually the poverty of nations, that you just don't have enough money to fix all these problems. And you need to fix that. Now, there are solutions, and I'm sure you probably will ask about that later on.
And then I found another one of your quotes interesting. I'll just read this. You just say, quote, "With hindsight, we will come to realize that we peaked as a civilization between 1990 and 2020. It was as if the COVID-19 pandemic sounded the bell to the end of an era." End of your quote. So are you saying that like globally we've peaked? Is this in developed countries specifically? And so essentially we've hit peak civilization. So now in 2024, are we already on the downslope of this, peak civilization, whatever you want to call it?
Yes, I think we are. If you just reflect on what happened post 1990, in fact, let's reflect on what happened before 1990. We had a world in pretty much in turmoil. I mean, in places like the UK, in the Brazil, Argentina, you had basically almost civil wars. In the UK, you had the Northern Ireland and the sort of terror attacks. South America had several civil wars, etc. Of course, there was always this threat of the Third World War, a nuclear war breaking out, because we had the Cold War between Russia, the USSR, and America. So we lived under that gloom. And then all of a sudden, 1989, Berlin Wall fell. 1990, basically, we're in a completely different era. Large parts of the old Soviet Union embraced capitalism and market economies. China opened up to the rest of the world. The internet was born in that time. Cell phones became ubiquitous, and it just ticked all these boxes. Everything that you need to make life pleasant. So look, we did have problems. I'm not trying to sugarcoat it. We did have strife in certain places, but on a macro level, from a global sort of perspective, it was a Goldilocks period. We had a lot of things that uplifted us, driven primarily by internet, increased education, to access to education because of the greater connectivity that we had in. And then by the end of that 30-year period, it was maybe just a coincidence that we had the big COVID sort of event. But it was neatly sort of just closing off. Okay, that's it. Game's over. Now on for the next thing. Now we think, I know there's a lot of optimists out there thinking, okay, this will continue. We look at what happened, our development of the past century, and extrapolate that over the next century. But we are missing some important things. Everything that we do ultimately has to be done, and I'm talking about from an industrial and the GDP growth point of view. Everything that we have to do, that companies do, is ultimately for an end consumer. So think about it, whether a company is a bank or a retailer or even a mining company, the products ultimately will be driven by the demand from the end consumer. Now, what happens if those numbers of end consumers decline? Well, your numbers of your demand drops, your aggregate demand declines. So it doesn't matter if you've got great AI, great technologies, etc., to optimize your efficiency as a company. The fact is that your turnover, your sales will decline because your demand declines. And that has an impact on household income. It has an impact on government income because now all of a sudden your taxes are lower. And therefore, if you have less income, well, then what you can spend on infrastructure and social welfare also declines. So you've got this domino impact of things that happens when the number of end consumers actually decline. So that's the phase that we are in now. And that's why I say that Goldilocks period, in fact, from 1750, we can go back 2 centuries, from 1750 onwards, we just had strong population growth post the Industrial Revolution. And that's coming to an end now.
It's hard to extrapolate things out decades in the future. Like no trend really usually continues forever. Do you think that in say 2060 everything could be reversed in the US? In 1960, for example, the fertility rate was over 3.5, and then by the early 70s already it was below replacement rate. But then by the late 80s and early 90s, it was either at replacement rate or above. Before the global financial crash in 2008, the U.S. was also above the replacement rate. Then after the global financial crash, the fertility rate just kept going down every year. And it seems like if you could reverse the economy, then that fertility rate would also be reversed.
Yeah, so to answer that question, we just have to unpack what drove those fertility spikes. So what happens is that when you do have higher levels of immigration coming into your country, immigrants typically have, in the first generation, they do have higher fertility rates than the native population. But pretty soon they adopt the trends of the native population. So you may have had that sort of distortions over a period of time. The one period where the US definitely had a huge spike was, of course, the baby boomers. So post the Second World War. So I looked at some research that was done on the whole baby boom trend, and I asked the question, can we repeat or bring back a baby boom period? But now there were specific reasons for why the baby boom happened in the 1950s and 60s. And those actually goes back to the fact that women, who traditionally young women, they stayed in the workforce until they got married. And then this was up to the Second World War. The traditional trend is post-school. Basically, you go into work until you get married and then you become a housewife. But what happened when the Second World War occurred, they needed people to work in factories. And that's when you got the riveting Rosie sort of icon in terms of women working in the labor force. But after the war, the older women would normally be at home being housewives, etc. They didn't go back and they stayed in those jobs. So the young women that actually came of age, they, instead of going into the job and finding a job there, they didn't, and they actually started families earlier. So that was the research that was specifically done by some universities in America in terms of understanding what was that dynamic. We can't repeat that. I mean, that we can't force young women to stay at home and start families. It's just draconian. So that's not an option. So what caused the baby boom of the 1950s and 60s was unique, and it's unlikely to be repeated.
According to the U.S. Federal Reserve, they say that in countries, once GDP per capita reaches about $10,000 US per person, then the fertility rate of that country goes below replacement rate. I think the UN projects that in the year 2100, that half the kids born in the world will be born in Africa. But that, of course, assumes these linear projections. But, you know, like you mentioned China. I mean, China pulled itself out of poverty, and then all of a sudden, within like a couple of generations, it's having a population collapse. And every time a country gets developed, they go through this cycle of baby boom, population collapse even faster. And in $10,000, dollars per capita, it's not even that much money, really. It's not. If with some economic changes and growth, it wouldn't be that hard to hit that $10,000 mark, especially with urbanization and things like that, where urbanization forces people to have less kids when you're crammed in these boxes in the city, whatever. There's a lot of factors, but
yeah, no, for sure, that will definitely happen. Africa will follow the same trend. There's no reason for Africa not to follow it. But the point is that we are so far behind you guys that you guys will struggle with these issues a lot longer before we hit that problem here in Africa. And that is the difference. So I wouldn't worry too much about the fact that eventually Africa will also be sub to 2.1 fertility rates. That will happen in the next century. But when that happens, I mean, like, the West better have, and developed countries better have a solution for this problem. Now, AI and technology won't be that solution. Pushing up retirement age won't be that solution, as I explained in my book. So all these things that we think will bail us out will be the silver bullet. It's not.
Since you mentioned solutions, what are the solutions? Are there any solutions to begin with? If there are, what are they?
Okay. So, yeah, and also in your previous question, there's something that I didn't address. You said that things can change quite quick, etc., and what's the chance of that happening? That's also linked to this thing about solutions. So there are countries that have tried things. Take Singapore, for example. So in 2000 already, they realized that, look, our birth rate is too low. So let's put in what they call pro-natalist policies. So these policies are aimed to encourage families to have more kids. So they'll take this form of baby bonuses. They'll pay you a bonus, like a cash amount if you have a kid or 2 kids or 3 kids. They'll give you extra maternity leave. They'll give paternity leave, all sorts of things that makes your life easier. Even funded preschool care and all those type of things. What happened? Now, this is Singapore. It's a rich country. Over the next 20 years, the fertility rate still continued to drop. So then there was some researchers that did some studies on this. They tried to understand why was that. I mean, like giving all the perks, all the incentives to have more kids. And the conclusion that they came to is that firstly, you can't just put a monetary benefit to this. It's not like I'm going to have a kid if you pay me X or you do this for me. It's not that simple. There's other factors driving it. But one of the most fascinating things that I found from the list of reasons was that in countries where you have high human capital index, in other words, where there's a high level of achievement, what happens is the parents make the calculation that, look, I want my kid to succeed. And for my kid to succeed, they must get a great education. They must get all the things that they need for them to succeed, because I live in that society of this high human capital index. So places like Singapore, Japan, South Korea, etc., they are right there. So the kid goes to school, and after school they get tutoring, etc., preparing to get into the best universities, etc. All those things cost money. So quite often people make the case that, yeah, it's too expensive to have a kid. Well, why is Africa was probably the lowest level of income per capita? Why is the fertility rate so high? It's not the affordability issue. It is the fact that our value system is such, specifically in countries with high human capital index, that you do have that type of trend that this is a choice that I make. And it doesn't matter what governments say or do in terms of giving a carrot there to entice it. So that rules out this pro-natalist policies. Look, it's been tried by several countries. Sometimes they see a bit of a spike, but also what they've realized is sometimes people, let's say they were planning on having a kid 3 years from now they've implemented this policy, all of a sudden let's start it now, before they change the rules. Okay, so it's kind of front-loading it, but the number of kids per family still stays the same. That's the one aspect of it. The other aspect in terms of, your second part of the question was?
What are solutions that you see that are actually, that are actually viable, that will work, if there are any?
So that's the one part, the fact that the pro-natalist policy doesn't work. The solution for that, I just want to also discount the other solution that people put forward, which is technology and AI and robotics. So Elon Musk, for example, said that we'll have 2 robots for every 1 person at some future point in time. And we don't even have to work. Now, that is a massive oversimplification. The reality is that even if we had to roll out millions or billions of robots to do all this work, which, by the way, they can't, because that's a separate story. But let's just say we do that. The fact is that who's going to repair those robots? Robots will break, like cars break. So when you look at the advent of the motor vehicle and how that replaced the horse-drawn cart at the turn of the previous century, what happened was all those blacksmiths and farriers went out of work, but this new vehicle, the cars, created a whole ecosystem of fuel stations, of workshops, of tire repairs, tire replacements, etc., that needed to take care of this new item called the vehicle. Now, the same will happen with robots. So if you have AI robots doing all these things will break, and who's going to repair them? Will it be another set of robots? Unlikely. So you will need labor to do that. The second solution that governments and economists like to put forward is, well, let's just push up the retirement age. Okay? So if we get people to work, instead of retiring at 60, retire at 65 or 67, as some countries are doing now, then that will solve the problem. All it does, it buys them a couple of years in terms of getting to that problem area. But more important, it can only work in some occupations like administration, managerial, office type work. When you look at the typical blue collar work, it's quite often sort of heavy work, things that need some heavy lifting. And it's unlikely that older people can actually be as physically adept at doing those jobs. So then immediately you cancel out a lot of jobs. Also, what's interesting is that in the US, the FAA, Federal Aviation Authority, they mandate that the air traffic controllers must retire at the age of 56. Now, 56, you think, that's young. Why do you have to retire at that age? Well, they've got the medical evidence that says, look, certain things, your reactiveness, etc., certain things starts to wane as you get older. Now, with that same argument, would you want a 75-year-old driving an 18-wheeler truck on a freeway, and that person gets a heart attack or a stroke and puts a lot of other road users at risk? So those will be the practical limitations of just saying, we'll just push up the retirement age. Now, ultimately, the solution will come back to the experience of the people. And I think we need to go through this whole cycle, and people will need to experience. So the way that I see it playing out is that, and as we go through this, we pensioners basically find that the pension payments are not sufficient to give them a good standard of living. Their children will see this. That single child sees their parents struggling to cope with their pensions. And because of the high cost of living for the worker, they are limited in their means to support their parents. So what's going to happen is actually we go full circle. Now, before we had this declining of fertility rate, or the thing that caused the declining fertility rate in the first instance were urbanization and rising education levels for girls. With urbanization, basically, we then realized that it's costly to have a kid. In the rural setting, kids were assets. They helped with chores. They could help run the farm or the rural homestead. But if you move to a city, it becomes costly. You need a bigger place, which costs more money. They need to go to school, it costs money, etc., and all those other things. And they need to be taken care of. And when you're in the urban area, you work for a company, you have a pension, etc., so you don't rely on children as you did in the rural setting to look after you when you're old. In the city, it's completely different. But what happens in future, and this is where I think the trend will start reversing, is that when children start seeing that their parents are struggling in that manner, that they actually, despite working very hard, started having a good education, great job, put a lot of money away for pensions, etc., they were struggling to make ends meet at the autumn of their lives. And they will realize I can't just have one kid to look after me, who can't actually look after me. Maybe I need 2 or 3 just to play it safe. And that's when we go almost back to the pre-industrial sort of mindset in terms of children are assets as opposed to an expense that we currently have.
What are some other solutions that you see?
It's difficult to put other solutions for in the book. I mentioned some of the examples of things that can go bad. So when you have certain countries, and I give the one example of Romania, but at the time of the dictator Ceausescu. So he actually banned abortions and all sort of preventative measures to basically bolster the births in that country. And he was successful.
Like birth control, things like that.
Birth control, etc. So that is fairly draconian. And I mean, you're familiar with the Handmaid's Tale, the series. I mean, those are like radical things that really, it can actually happen. I mean, we shouldn't discount anything. But those are type of draconian things that could happen by some authorities if they want to maintain a strong army, if they want to maintain the global stature on that. So we have to be very careful that we don't end up in that situation. The best solution ultimately is for people just to realize, that if we go down this path, and one of the messages that I have in this book is the best people to read it is actually parents of young kids and young adults themselves, to know that, listen, when I hit retirement age 40 years from now, this is the reality that I may be facing. So I need to prepare for it.
Ryan, like as you mentioned, I mean, a lot of people mention technology as a solution, but like you're saying, do you really see a robot replacing a plumber or a nurse or a pipe fitter? Like I said, if you have these fixed costs on maintaining this infrastructure, you're not going to be able to automate that. And then, of course, these robots and technology doesn't pay taxes and they don't consume, right? And then, like you said, then you have to have a whole sophisticated workforce that you don't have to repair them, which is probably would be a very high IQ, intellectual person to have the capacity to even fix these complex things. Like if we had some fallout today, how many people could recreate the iPhone, or something like that?
Yeah.
I mean,
yeah. You touched on a very important point there, which I haven't raised earlier, which is the fact that even if you had to go this automation route, the robots don't consume. They're not going to sit in a restaurant. They're not going to go on holidays. They're not going to do all those things that actually is part of a thriving economy. It's the demand of it. So you can improve the efficiency of it, but you cannot create a demand. And that is a big part. I mean, demand, household demand is typically 60% of GDP. So if you shrink that out and replace it with robots and other sort of things, where it is possible, it still hurts you in terms of your economic growth and demand.
So as an investment analyst, how do you use this information to position yourself, whether it be business opportunities or investments? How do you use this information?
Yeah. So that's very important. In fact, we think that most investors aren't paying attention to this. So we're also, fascinated with the latest shiny thing that's available, like NVIDIA or the amazing, the Magnificent Seven stocks, etc., and all those type of things. But what we don't realize is that ultimately each one of those companies have a certain profile, a demographic profile, which you can calculate, which is what we do in our analysis, by the way. So we'll take any company around the world. We'll say, okay, who do you sell to? Which countries do you sell to? So we then look at, okay, what is your product? What's the target age group of that product? Now, for example, we did this analysis on a high growth gaming company. And the results were fascinating because they were exposed to a market where that age segment of gaming in the countries that they were selling to over the next 10 years were declining very fast, but it's not priced in. So a lot of investors were seeing this fast growth and huge margins over the past few years, and they extrapolate that into the future. And we're saying, well, the people that they're selling to now is actually, they've peaked already, and they're going to start declining. So it doesn't matter what gaming titles you come up with the next fortnight or whatever it is. The fact is that in the markets that you are selling to, it's shrinking. And you will be hit by it. So that's what we try to do. And there's upside opportunities from it. So if you look at aging populations, for example, then you look at some drug companies, you look at some healthcare companies that could be great opportunities. And we assess it on that basis, on a company, basically demographic profile basis.
So what do you think would be the companies that are most susceptible to crash right now? Everyone is on this AI kind of hype cycle, and I think it's kind of overrated. But what do you think about some of the most overhyped cycles right now or trends?
Yeah, so you only have to go back 20 years, 25 years to the late 1990s when we had the big .com boom. And, it was the same thing. This is going to be great. This company is going to shoot out the lights, etc. And of course, Enron failure and the like. So it's nothing new. You always have this sort of trends. In the book, I give the example. If we go back 100 years, we look at the biggest companies listed on the US stock exchange, in New York Stock Exchange in 1917. And you look at who they were. Basically, they were resource-dominated companies. We talk about Standard Oil. We're talking about US Steel, etc. 100 years later, who were the biggest companies? We're talking about Apple. We're talking about Facebook, Meta. We're talking about Amazon, etc. All these sort of consumer-related companies. So we went from resources, which were required because that's at the start of the industrial development of the US, to now we in the consumer focus. 50 years from now, it's going to be very different. It's not going to be an Amazon. It's not going to be an NVIDIA or Meta or anything like that. It's going to be that's appropriate for that. And if you look at the trends in this book, you look at what's going to happen in terms of what will be the services required and what's not required from an aging and shrinking population, you can draw the conclusions there as to which companies are likely to be the best bet. I must point out that I don't think it will necessarily just be sort of the healthcare sector, because what's likely to happen is that because of the large number of aged people living off a fixed pension, it may be highly regulated. So the pricing may actually have caps on. So you can't just go and make a killing in the healthcare sector. It will be a highly regulated space, in my view.
Let's say you lived in the US and you were a US investor. Would you be looking to invest in other countries then?
So what you need to do from an investment point of view, you need to look at two things. I just mentioned the one thing where We look at the revenue, where your revenue is generated, and what age group is your target market. But there's another thing that we do. We look at the product that you make, your production base, where is it? So earlier I mentioned that Italy's got a big labor shortage problem, Germany too, by the way. So if you have factories in those countries, if you have a company and most of the production is in those places, well, then you've got a problem. So you need to look at which companies have the production base in a place where there's abundant labor. So it's the two things. You must have a low demographic risk for your revenue. In other words, the customer base that you're selling to is still growing, and your labor force where you're making your product is still strong, and you don't have to compete for labor or pay high wages for labor.
Yeah, there's a lot of things to think about too. I mean, I remember in the book where you're talking about as you get older and you have a lot of workers have their money wrapped up in these pension funds, but then you go from younger workers having money in their pension fund and more growth potential because they have a long 30 years more of working, so they can take riskier opportunities and be more innovative. But then as you get older, you're pulling that money out of stocks and putting it maybe more in bonds or things. You don't want to be high risky, when you're 60 years old, going to retire in a couple of years. So there's a lot of things that really change the dynamics even well before you like I said, kind of reach like this tipping point, right?
Exactly. Yes, exactly. Yeah. So that's what I try and do. So it's fairly, I mean, the number of topics that I cover in the books is so wide that you touched on now in terms of the investment profile of the investment mix. And that's got implications for companies because all of a sudden the demand from pensions funds would be, listen, we want what we call fixed income investments, i.e. bonds. Okay. Now, young companies, a startup, they are not funded with debt like bonds. They are funded with venture capital, which is equity. But there'll be low demand for equity because of the older customer base. And that will also throttle basically the growth of new technologies because the money won't be there to fund young startups.
Two final questions for you. Just where can people find your book, The Age of Decay, How Aging and Shrinking Populations Could Usher in the Decline of Civilization? Where can people get a hold of you? Then secondly, just leave us with a final thought.
Yeah, so that's what the book looks like. It's available on Amazon, on Barnes & Noble, Kobo, etc., on all the various platforms. And also you can ask to request it through your local bookshop, and they'll be able to order it through the book distribution systems.
And then just leave us with a final thought, whether it's related to your book or related to just whatever's on your mind.
So the book is, when I opened up, I said it's a very provocative title. It is not just for shock value. I think it is very important for all of us to understand this is a path that we're on, and we mustn't sleepwalk into these trends that I describe in the book. We can do something about it, but it's going to take some effort. It's not just saying, look, wait for AI, wait for retirement age. We can all be, there is a positive aspect to it, which is actually the demands on the environment and those type of things will be positive because the lower population will have a lower demand for things like jeans and shoes and all the consumer goods that can be highly polluting. That's positive, but that will in any case happen. But we also need to understand that this is the life that we'll face if we have too few essential workers, and how disruptive it will be for us. So what can we do about it, and how do we direct our children in the right way in terms of listen, prepare yourself for this eventuality? Because ultimately, it won't affect us, Jesse. We'll only see the start of these trends, but the next generation, certainly, they will be in the thick of things.
My dear friends, that is it for this episode of El Podcast. Once again, if you're not yet subscribed, please subscribe on YouTube as well as Rumble. You can also find us on Spotify and Apple Podcasts or wherever you get your podcasts from. We thank you all from the bottom of our hearts for watching and listening, and we will see you on the next episode.